Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Wednesday, August 21st, 2013. Well, a continuation of the trend to the downside today in the candle that's made a lower high and a lower low. Previous day's trading we had a white-bodied candle suggesting that there may have been a shift in momentum back to the buyers, where that momentum was definitely in net terms throughout each trading day to the sellers. But we were looking for a higher high and higher low and confirmation of a potential change of trend. This was a potential Japanese candlestick harami pattern, and that's a reversal pattern, and there was potential for the market to change trend to the upside, but that didn't happen. So no confirmation of that trend. And yesterday, if you recall, we failed to see the buyers taking control. The market closed around the midpoint level of the range, suggesting that neither side had control. So there was a possibility for the buyers to change the trend of the market, but it really says something about the lack of strength of the buyers now in the context of today's candle, looking at the potential for that change of trend yesterday. For the third consecutive trading day today, we've seen the market trade above the 1654 level and be rejected from there. So that is fairly significant and quite a strong sell-off from that region, with the market closing down towards the lows, suggesting that the sellers have once again taken control of this market. Now it seems that there's a very strong likelihood of this trend continuing down, but I would suggest that the downside move may be limited very soon. The market has potential to act with the top of the cloud in the next trading day or two, and that should hold as very strong support for this market. And we also had this small window that was opened up previously in early July, and it's a little window that has probably been forgotten about, but could be quite significant for this market. And combined with it occurring now around the level of the cloud suggests that support there just on this basis will be very strong. We also have the market trading down roughly to around the bottom of this highlighted yellow zone, and we have seen some small loss of commitment as evidenced by the small shadow on the bottom of this current candle, and therefore we should see some strong buying coming in. Now as we move further into the trading week and into next week, we will see the dynamic level of support at the top of the cloud actually move higher. So if this market does attempt to rally, there will be a good solid base down below it as formed by this area of the cloud. Now the cloud, however, here, if we do see some solid bearishness and the market testing down into the cloud and down below the window in a fairly bearish manner, the amount of cloud is only fairly thin here for the next couple of days, and we could see a decisive breakout to the downside. But it certainly doesn't seem that. The market has done a lot of work to test down to the levels that we're trading at the moment. We have tested below the 1654 level of previous resistance and then support, and it's now once again holding as resistance. So that will be a very strong area that may limit any upside potential. So we have a market that's really bound by strong resistance overhead and very solid support down below. So not a market that we really want to be trading at the moment. We need to find resolution of this, and resolution would be a solid bearish breakout down below or some very solid bullishness coming into the market for the market to trade higher. In terms of the Fibonacci extension, and we've looked at this for the previous day, the market has a very strong likelihood of now testing to the 261.8% level at 1635. That coincides with that area around the top of the window and around the top of the cloud. Very, very solid support just down below where the market's trading now. And the Fibonacci retracement technique gives us the 423.6% level around that area as well, therefore suggesting that we should see some very solid buying coming in that area, and there is potential for the market to change trend or at least change sentiment back to the upside. Now in terms of Ichimoku, obviously the market remains bullish in the long-term time frame by trading up above the cloud, and we're only just bullish in that long-term time frame, and as I've mentioned before, the market was looking very overextended up around these levels, coming back to find equilibrium, and there's a strong possibility that we will then bounce off that equilibrium and continue trending back up to the upside, or we could trade down through that cloud. As I've mentioned, it's very thin, and then trade to the downside. If we do continue to trade lower and down through the cloud in a bearish manner, 1600 level should be a very, very solid support around number as well, but not trying to preempt the market. I think it's more likely that we will bounce to the upside. In terms of the medium and fast term timeframes, we are trading down below the Kijun Sen and the Tenkan Sen, so we have a bearish market in the short term and fast term timeframes, and there has been a crossover of the Tenkan Sen below the Kijun Sen. That is a sell signal with Ichimoku. It has been a good sell signal. The market has traded lower, but it's only a weak signal because the crossover occurred above the cloud. And the reason why it's weak is that obviously there's a strong likelihood of the market interacting with the cloud, and that may limit downside potential, and that's exactly what the current situation that we're seeing, and that's why these signals tend to be only fairly weak signals. In terms of the Chica span, that's trading below the corresponding price action, so it's suggesting that there is negative momentum in the market at the moment in that medium to longer term time frame, and it's supporting what we're seeing with the Kijun Sen and the Tenkan Sen, which by the way are pointing down quite sharply and suggesting that the market may trade to lower levels. So it seems to me as though we may see the market test down to around the top of the cloud or to within the cloud and find support around this area, very strong area of support through this 1635 region down to 1630, and then potentially see the market bounce. If the market does bounce, 1654 is important resistance, and if we see a solid bullish close up above there, we could quickly see the market trading higher and potentially back up to around the 1675 level.